So a question came from one of our camera guys when
Who shall not be named.
we won't mention any names, but we're talking about LLCs and setting up an LLC to save on your taxable income with purchasing your vehicles, right? And strategically, should I buy or lease? And first of all, you need to have an LLC. So the question came in from behind the scenes of, we're in the 2023 calendar year. Can he still set up an LLC? Should he still set up an LLC? Even though we're in the middle of the year and for 2023, what is your answer to LLCs? Let's talk a little bit about that. Again, we're not certified CPAs, but we have a lot of experiences with CPAs and setting up an LLC, and I feel like we can give some valuable information here. So what's your opinion on an LLC, Bron? Should a cameraman or should anybody have an LLC, and why?
100% yes. So the tax code, believe it or not, was written, 95% of the tax code is written to reduce taxes in America. Crazy, right?
Incentives.
Yes. But the only way that you actually get to take advantage of those incentives is if you are a business owner. A business is a business. You might think business owner and think, oh, I got to have this huge, massive business. You don't. A business owner can be anybody who sets up an LLC, a limited liability company, and runs whatever they want to out of that business.
Yeah.
And the IRS looks at that as a legitimate business, which it is. So if that's the case and you're running a legitimate business, everything you're doing, well, not everything, but a lot of the things that you're doing in order to operate that business can be used as an expense. Well, if you're halfway through the year, don't wait until next year to do it. Do it now.
Yeah.
And so you can start taking advantage of that. And then you can also go back and capture some of the expenses that you've had in the past
You can amend your tax.
by amending your taxes.
Yeah.
Absolutely.
We have sales guys all the time, right? We're over a sales organization, 400 sales guys that are making professional income, and a lot of them for the first time in their lives, they're making 75 grand in their life. They're making 100 grand plus in their life, and they have no idea what they should do with this money, if they should set up an LLC. And a lot of times we'll get to December, we'll get to the end of the year, and we'll find out
Oh,
that
yeah.
they have not set up an LLC. My first year, I didn't have an LLC, and I paid so much in taxes because now you are taxed as an individual, you're taxed as an employee. And the book Rich Dad, Poor Dad talks about these cash flow quadrants, right? But he actually shows and teaches that the employee is the highest taxed individual in the country. We're talking about lower income, middle class employees working 9 to 5 pay more in taxes as a percentage than anybody else in the country, because you're going to work and the government takes your taxes out of your paycheck. Before you even get paid, you get it out of your paycheck. In the early 1900s, to fund war, they needed American workers to help pay for the war. So they established this tax codes. They established these tax laws that everybody that had a job had to pay their taxes. Well, guess what? Nobody paid their taxes, right? And so what they do the next year, they establish a new law that they will take their taxes from employees before they get their paychecks, right? They will withhold some of those taxes. And that's what the IRS does, is they take these employees and they take your taxes out of your paycheck, and you're hoping for a tax return at the end of the year, right? That we paid too much in taxes. That is theft by taxation, if you understand that.
Yeah, it
Like,
is.
it
Absolutely.
is your highest expense, and we're talking 30% of your income. Some people 40% of your income, if you're not smart and strategic about the way you do your taxes.
But just because you're a business owner doesn't mean you're going to save on taxes, right?
No, correct. You got to actually understand your tax
Yeah.
codes and tax incentives. So as you become a sole proprietor or as a business owner, right, an LLC or a business owner, self-employed or a business owner, you are now in a new tax bracket, right, where you have an LLC, and now there are 95% of the tax codes, like you said, that are designed to incentivize business owners and kind
So
of
hold on. Curious, why are they designed to incentivize business owners? Do you know?
we can go down that rabbit hole, but really it's because banking system and the government and lenders are all the same people. They're all owned by the same companies. They're all owned by the same people. They all make America tick, right? But wars and things in this country are all paid by taxpayer dollars, right? And so they want to take taxpayer dollars from those that are good employees, right? That are owe their dues and pay their taxes. Um, but those that are actually innovators in creating those jobs, that are creating those opportunities to have good employers, the ones that are actually going out and creating the businesses and creating the business plans and creating the opportunities, they're the ones getting the tax breaks because they're out there creating those opportunities. The government says, go create a business, buy a fleet of vehicles, hire a bunch of employees, pay less in
Help
taxes,
the economy.
help the
The
economy.
whole purpose is to help the economy grow. And
Correct.
if you're not helping the economy, then the government is not going to give you an incentive. Bottom
Absolutely.
line,
Yes.
if you have a business, you're helping the economy grow, they want to incentivize you to continue to help the economy grow. If you're
Yes.
not in that category, you don't get to participate in the incentives and taxes.
Just look at some of the tax codes that we are well aware of, which is, business meals for 2022. This is the first time ever that they created a business meal plan that you could write off 100% of your meals as long as business was discussed, right? We're talking Chick-fil-A, wherever you're eating at, you could write off 100% of that meal as long as there's a business discussion. You had somebody there that discussed business, right? Which all of my kids, all of my family is part of my business. They're all employed by my family. Anybody I go to lunch with, I never go to lunch alone. I'm talking business. I'm writing off 100% of my meals, right? Any normal employee doesn't get that advantage. They don't get to write off their meals from their taxable income.
Except for this year.
Why did the government change that in 2022? Why did they want us to go out to restaurants more than ever before? It was because of COVID, right? They wanted to support the economy. They wanted businesses to eat out again. They wanted to encourage people to go here. So they're influencing where and how we spend our money. You spend your money here, you're a business owner, you can deduct that off your taxes. We want you to purchase new vehicles. You can depreciate 100% of that vehicle as long as it's for business use. Let's depreciate that off your taxes. We want you to go buy real estate. You can depreciate that asset 100%, almost 100% over a course of 27 years, or you can accelerate that through cost segregation and you can write that off your taxes. Why are they doing this for business owners? Because these are those that are creating momentum for this country, boosting the economy and going out and doing this. So, um, I'll just put this out there and maybe you have some more to say on it. But if you're listening to this and you are a 9 to 5 employee, that's fine. You've chosen that path. You need to also be an innovator and a creator. You need to be a business owner in some way or fashion, whether it be a side hustle or a rental property owner or whatever it is. You need to establish some sort of small business so you can take advantage of these tax codes and tax incentives that can minimize your taxable income on your W-2 wages. Like you can buy real estate and offset your W-2 wages with the losses and deductions that you can get through real estate.
Only one more thing with that. I mean, everything you said, that's great. I agree with. The other thing is the tax code is not set in stone. It
Changing.
constantly changes. If if you're not aware of some of these tax changes, it will bite you in the butt hardcore,
Mm-hmm.
right? Some people expect to have their meals written off at 100% in 2023. Not happening. You only get
2023's changed already.
it's already changed.
Yeah.
You only get 50%.
Yeah.
Well, if you pay your taxes, it used to be that if you paid your state tax, you didn't get to write that off. Well, last year they changed it. If you can pay your state tax, the federal government is going to count that as an expense to your business, and you can now write that off on the federal side. That's huge for businesses.
It's massive.
Right? It's massive. But if you don't understand these tax codes are changing, and when they're changing, and you don't have someone who is helping you understand this stuff, you're going to be left behind and you're in the dust and you'll be in trouble.
I think that's where you hit on the head. So I think everybody probably listening to this that doesn't have an established LLC is it sounds like a daunting task.
Yeah, it does.
This is something you can go on a website like LegalZoom.com, and for $300 you can set up an LLC in the matter of 15 minutes. Like, it is something so small that you can establish your LLC. Or if you're scared of making a mistake, you can contact a CPA and say, I want to set up an LLC. He'll probably charge you $500 to do it, and he'll do it for you. And then at the end of the year, you can say, will you help me with my taxes and help me understand the tax codes? And my CPA provides me probably a 50 to 100 page booklet of questions that he asked me about my business and my expenses. And I go through all my expenses at the end of the year, and I write off, or I show every one of my expenses and where I'm spending money and where I'm paying interest on mortgages and where I'm paying interest on car payments and what kind of cars I purchased and did I have any kids. They ask you all these questions because they understand the tax codes. They are professionals in this industry. And then they will go over your taxes. They will show you where they can give you savings and where you're going to pay in taxes. And they will save you so much money on how much you actually pay the IRS in taxable wages.
It's so, if there's one thing I've learned over the years of doing, of owning businesses and, all this stuff, it's surrounding yourself with a team of professionals, right? And an accountant or a CPA or a firm that handles this, they are a professional that you do not want to skimp on.
No.
That is one you do not want to skimp on. You want to get one that can educate you, help you, be on top of things, understand when tax codes change. And if that's not your thing, then great, set up an LLC. It's as simple as this. Set up an LLC, go read a book called Tax-Free Wealth.
Yeah.
And then you're at least well on your way, right?
Yeah.
If you don't want to go hiring a professional to do it, at least do those two things and you're on your way.
Yep. So we're talking, guys, probably 20 minutes to 30 minutes of your day to save you thousands and thousands of dollars in taxes, right? Your largest expense in life is your taxes. So this is an investment you need to make in yourself to understand your taxes, understand your finances. And it starts by calling a CPA and finding a mentor and just saying, I need to set up an LLC and I need somebody to help file my taxes. And we're talking probably $1,000 at the end of the day to save you tens of thousands of dollars.
Do you guys do you want to know the easiest way to increase your income from one year to the next?
Minimize your taxable income.
Minimize your taxable income.
Yeah.
You minimize your taxable income, you will just have gotten the biggest income increase you have gotten from one year to the next.
And
don't skimp on that.
No, you don't skip on it. And as your income increases, you get more and more strategic about your taxes, right? I used to have a tax meeting right at the end of the year to just kind of review my expenses. Yeah. Now that my income is increased to a level where I need to actually plan on expenses and plan on deductions, I will have a meeting in the middle of the year. I know you do this too with my CPA, and he will mentor me and say, in order to offset your taxable income, to offset your wages, you need to buy more real estate. You need to put more money here that we can depreciate. So I'll have a plan in the middle of the year that I need to buy more real estate to offset my taxable income, to be in the lowest taxable bracket, to pay less in taxes. And so this is just getting strategic about your taxable income. And this is a huge investment in time that will make you the most amount of money.
Yeah. If you're a business owner and you're not doing this, figure out a way to get it done, because it's going to save your butt for years and years to come.
Yep. Thanks for tuning in. Great podcast. More like this to come.